Did you make any money with this technique? Is it set and forget trading strategy? Did any broker or exchange refuse to withdraw the profit? Can I put $1 million and go big with latency arbitrage trading? What's up everyone, my name is Mike, I am a software engineer, algorithmic forex trader, and recently I live in Thailand as an expat. And trying to find the best place to live as the digital nomad. And if you are interested in forex trading, algorithmic trading, arbitrage trading, or just my random thoughts, feel free to subscribe to this channel and to watch my other videos. But anyway, now it's time to talk a little bit about the topic of this video, which is arbitrage trading, latency trading in context of forex brokers. So let's begin. Okay, so let's talk a little bit today about latency arbitrage trading. So first of all, let's start from explaining what latency arbitrage really is. So the idea is simple. Forex is an OTC market, same as crypto market. And by OTC I mean over the counter, which means that the same financial instrument, security or commodity or crypto can be traded on multiple exchanges at the same time. And even outside the exchange in so-called dark pools, but let's leave the dark pools. That's the topic for another video because it's a big one. Anyway, so we have assets like gold or Euro USD or Bitcoin that are being traded in multiple exchanges at the same time, right? So now each exchange has its own servers. Those servers are located in different locations across the entire world. So some of them are in financial centers, infrastructures, and some of them are in, random locations. When the exchange or broker wants to set up small operation for market making activity with small budget, they could even put their hosting in someone's home on Raspberry Pi, for example. And I mean, of course, this kind of solution is not scalable at all, but you get my point. So those servers could be located anywhere. And another thing is that each of those brokers and exchanges has their own algorithms. They have their own matching engines, which is an algorithm to match incoming orders and produce trades. Some of those engines with correct hosting architecture can be extremely fast, believe me. So those speeds result in the order processing time. Some exchanges can match your order in few milliseconds, and the other ones that are not so good can make you wait even longer than 1 second to fund you the match or reject your order, which is not so good if we want to use the latency to make some profit. So different exchanges and brokers process your orders in different times. Now let's get back to the servers. In the algo trading industry, there is something called server collocation or cross connection. It basically means to run your algos on a server which is as close as possible to the exchange server to limit the distance the light has to travel in order to transfer the data from one computer to another computer. So you have even sometimes cross connection. So some brokers and exchanges actually offer this. By cross connection, I mean you are not only close to the exchange servers, but you are also connected by the Ethernet cable. So this speeds up the process dramatically, because now we do not have to send the data through the entire internet, but we can just communicate with exchange by dedicated cable inside their internal network. So now, based on everything I said before, we can monitor multiple exchanges at the same time, we can monitor their speeds of processing the orders, and we can choose the location for our servers close to very low latency matching engines, and then just wait for one exchange to have a corresponding lag to another exchange. So if this lag will constantly appear during market trading session, it means there is something we can exploit. So basically it means one exchange is matching your order faster than the other exchange. So it means the latencies are lower, so more processing is being done at the same time, and it results that you have faster quotes because one broker starts to lag due to let's say, big volume of orders, and the second one is matching one by one. So of course the second one will have the faster latency, and in that case we will get faster information about the quotes. And this is basically what latency arbitrage is. We monitor many sources of trading activity, and if something is lagging, we take advantage of it. Simple as that. Okay guys, now I told you what latency arbitrage is, and I hope you understand it. You know, in fact, you can put in the comments information whether you understand the concept or not. Anyway, and I will now move to my personal opinion about this style of trading. So the first question is, did you make any money with this technique? And my answer is, yes, I did. I mean, not millions to be clear, but I think it could be in couple of thousands when I combine all my account flips. So another question is it set and forget trading strategy? Yes and no. It depends on the broker or exchange you are dealing with. You know, some of them are very stable when it comes to operation, but unfortunately, most of the brokers and exchanges inject special plugins on their server side immediately when they spot someone is using latency arbitrage. So those plugins increase the processing time, sometimes even to few seconds drastically, and drastically increase the speed that is impossible for us for this algo strategy to make money. So some of those brokers are very dodgy. So you have to monitor the runtime of your algos, and whenever you spot something dodgy is going on, you just immediately turn off the algo and try to withdraw your profits. Did any broker or exchange refuse to withdraw the profit? Yes, it happens from time to time when you're dealing with latency arbitrage and dodgy brokers. So I have currently one situation where I made 600% in 2 weeks and the broker refused to pay. So they did not even return my full deposit. But anyway, this case is still ongoing. So, you know, that broker is even regulated by SISEC, but looks like those regulations does not protect you. That, you know, if broker still can close your account and did not even allow you to withdraw your initial deposit, that's not good. That's the stuff latency arbitrage trader has to deal with, you know, on daily basis. Can I put $1 million and go big with latency arbitrage trading? You know, latency arbitrage is kind of like the sport. I could even say that the entire financial markets trading operations are like sports, and it's the same like it is with sports. The better gear you have, the better skills you have, the better you are doing in the sport. And it's the same with trading. If you want to put $1 million and trade latency arbitrage with that kind of stakes, you will compete with hedge funds. And when it comes to who is the fastest one, if you can afford very expensive architectures that cost like $10,000 per month or even more to just maintain your architecture, you have access to dark pools and you can identify inefficiencies of the market before big hedge funds would spot them in order to, you know, in order books. Then yes, you can try to compete. In other case, just stick to 1, 2, 5, 10K USD and also stick to smaller exchanges where you will have less competition, and in that case, higher chances to actually pull off the arbitrage algo trading. Is latency arbitrage strategy is here to last? In my opinion, yes. It will stay forever as long as we will have decentralized markets, and crypto is pushing our world in this direction. So the things that will only change are the algorithms that spot those inefficiencies and also hardware that is being used for this kind of operation. You know, I can wait when one hedge fund will finally develop quantum computer that will significantly outperform the standard 2-bits machines. And you know, when this quantum computer will turn on, in the next few milliseconds, we will see the flash crash like never before after, you know, turning this quantum beast on. But, you know, that's my opinion, my speculation. Okay, guys, I think I already shared with you some of my knowledge and opinions about latency arbitrage trading. Thanks for watching this video till the end. And if you like this content, please hit the like button and subscribe to this channel, as the growing numbers of subscribers helps keep me motivated to produce more content for you. like this, guys. If you also like exchanging nice ideas about algo trading, feel free to join our Discord community where we can talk to each other and exchange ideas. So without any further relevant information from me, see you in the next video.